Good morning. It's the 25th of November, Friday after Thanksgiving. We hope all of you had a wonderful holiday. This is Mike Mock with Lansing Trade Group's Morning Comments. Again, because of the holiday, let's go back and talk about Wednesday first. Again, a lot of traders off, and that can create some excitement. And added to it was the fact that the EPA made a surprise announcement relative to forward needs, in the ethanol and biodiesel industry. And we would say that the new requirements are modestly supportive to corn. It did help corn move from roughly 3 or 4 lower to about unchanged on the day. But the real explosive action was in soybean oil. And we don't want to get too deep into the numbers, but basically, if the EPA holds to this, if there aren't any changes moving forward, then this will require lots more soybean oil in the biodiesel industry. So we had basically a move of 250 points at one time. That was a limit. The market did lock a limit briefly, then backed off a bit, but it certainly changed the tone of what we call oil share, and that's the relationship of oil against meal as a total product value of the beans. So we had a $11 break in meal, which had been the recent leader, and a 200-plus move in soybean oil to the upside. Now, rapeseed markets in Europe were quiet to easier, both yesterday and here this morning. In China, the soybean oil market was a bit firmer, meal a bit of a loser, so kind of following the U.S. We'll see how that plays out. But that may give us a bit of a better tone in the oilseed complex when we open this morning. Again, everyone will be watching soybean oil and more follow-through. In other news over the weekend, or over the holiday, I should say, that European corn and wheat markets were steady to a bit lower. We also have, looking at weather, the situation in South America appears to be improving if you look at the models, but talked to 2 forecasters already this morning, both of whom indicate that they'd like to see a little more rainfall out of some of these systems. They've been basically in the south, this is southern, central Brazil and parts of Argentina, over forecasting against the models performance. So we'll have to watch that as we come back to the trade next week. But the models themselves would indicate we don't have any problems. Now, clearly, the thing that really jumped off the page at me here over the holiday was the fact that open interest, the amount of people participating, if you will, has just exploded in the soybean complex. And that's a bit worrisome here when you're up against these higher levels. We think this represents an opportunity for the grower. Our thought process is always when we want to sell it when somebody else wants it this badly. So with January beans north of 10.30, new crop 17 beans well north of $10, we think this is a place where people need to be active. We're hopeful that at some point in time, corn and wheat will catch fire and push a little higher. But again, we would suspect when and if that happens, those rallies will be fairly moderate. So the real focus, from the Thanksgiving holiday into Christmas is to prep for the first quarter of next year with old crops catch-up sales, and also begin the process of layering in the first jag of new crop protection. So again, seek out those best basis opportunities for cash contracts in old crop corn, whatever old crop beans you might have left. In the case of new crop, take a really good hard look at $9.80 floors, $10.60 ceilings, $10 floors, $11 ceilings if given the right opportunity. And in the case of corn, $3.70, $3.80 floors, again financed with $4.20, $4.30 ceilings. That's all I got for you now. You have a great weekend, and we will talk to you again the first of next week.